Hello, traders, my friends, and the ninza.co family. I'm thrilled to be here today once again to share this exciting webinar experience with all of you. It's been a month since we last discussed Zephyrus Force and multi-instrument synergy. As always, let me begin by introducing ourselves for those of you who may not be familiar with us or are joining us for the first time today. We've got something really special and exciting lined up for you. First off, we understand that some of you may already know us, while others might be hearing about us for the first time. We're ninza.co, a vendor offering a range of indicators, trading systems, and solutions designed specifically for traders. At this moment, we proudly offer over 170 products, supporting a vibrant community of more than 45,000 traders, with a total of over 100,000 downloads to date. Our journey in the market has spanned 10 years, during which we've gained invaluable experience and insights into what truly drives success in trading. Today, I'd like to share with you a technical indicator that we hold in high regard, PANA Kanal. This is a tool that has been widely used by many traders recently due to its effectiveness and reliability. For those who are already familiar with this indicator, you've likely experienced its ability to support trend identification and generate trading signals. However, I also understand that some of you may be new to trading or haven't yet explored how to use this tool optimally. For that reason, I'd like to introduce a strategy we've researched and applied in practice, called the multi-confirmation trading strategy. This strategy is designed to help you unlock the full potential of PANA Kanal, while combining it with supplementary analytical factors to enhance the accuracy of trading signals. Our approach to this strategy is simple yet effective. PANA Kanal serves as the primary tool for identifying areas of potential trading opportunities. However, instead of relying solely on signals from a single source, we integrate two crucial analytical techniques commonly used by professional traders: multi-timeframe analysis and intermarket analysis. Validating signals from multiple perspectives not only helps you reduce risks, but also increases the reliability of your trading decisions. In addition, an essential aspect of this strategy is trade management. By establishing clear rules for entry points, stop-loss levels, and take-profit targets, you can better control your emotions and maintain discipline throughout the trading process. In the next section, I'll guide you through the step-by-step setup of this strategy and answer any questions you may have. I hope that by the end of this session, you'll gain a valuable approach to incorporate into your daily trading activities. This is an advanced trading method designed to enhance the accuracy of signals from the PANA Kanal indicator. The approach combines multi-timeframe consensus analysis with correlation analysis between different trading instruments. Utilizing multi-timeframe analysis allows you to identify stronger and more reliable signals as it examines trends and patterns across both higher and lower timeframes. Additionally, correlation analysis between instruments helps you gain a deeper understanding of synchronized or divergent movements between markets, enabling you to make more precise and effective trading. So, why choose PANA Kanal over other indicators? What makes PANA Kanal the optimal choice for this trading method? Firstly, PANA Kanal is an indicator that provides high reliability trend and trading signals through a unique algorithm that combines ATR and Fibonacci. This combination enhances the ability to deliver more accurate and dependable signals, providing traders with valuable insights for making trading decisions. Additionally, PANA Kanal can operate effectively across various bar types, increasing its versatility and applicability in different trading strategies. Here is the process of how the indicator operates on Renko charts. You can see how it effectively identifies long-term trends with clarity and accuracy, helping traders determine optimal entry and exit points. PANA Kanal is particularly valuable for analyzing larger trends, enabling strategic trading decisions. Additionally, you can observe how the indicator performs on other chart types, such as range charts, to understand its versatility and effectiveness in providing trading signals. The indicator's adaptability across different chart types allows you to implement trading strategies that suit various market conditions. Next, after confirming the stages in a trend, we will continue to identify trading signals, specifically the pullback and breakout signals. These two signals in this indicator will be a bit more special than the typical pullback and breakout signals that have appeared before. First is the pullback signal. The special point about this pullback signal is that the algorithm processes it to appear only once during a trend, and you can fully adjust the range for this signal to emerge from the moment the trend begins. When you customize this first pullback signal to appear close to the start of the trend, it will have a high degree of reliability. As you know, the first pullback signal in a trend is more significant than all subsequent pullback signals, especially since you can adjust the range for it to appear. This uniqueness will benefit traders who prefer to hold positions longer to achieve higher profits, allowing you to take control of your position in a trend. Particularly if you don't want other trading signals to cause confusion during your trading process, this is the ideal option for you. Next is the breakout signal, which is when the main plot performs its function. For the breakout signal in a downtrend, when the price moves up and cuts below this plot, the breakout signal will be proposed. However, this applies only to the first breakout signal in a trend. From the second breakout signal onwards, this breakout will need to go through two filters to be established. For the second breakout signal in a downtrend, the price needs to retest the dynamic resistance area and then cut below the main plot for the breakout signal to form. This way, the second breakout signal and beyond will be more reliable because, after entering the resistance zone, if the selling pressure is strong enough, it must cut through the main plot, indicating the strength of the selling force. Similarly, in an uptrend, the first breakout signal occurs when the price dips below the main plot and then cuts back above it. From the second breakout signal onwards, the price needs to return to the dynamic support area and then cut back above the main plot for the breakout signal to form. This combination ensures that you don't miss signals in a trend while also securing good positions. Not only does this indicator provide trends and signals, but it also offers features to help you manage your trades better, such as suggesting stop target points and trailing stops. First, there's the trailing stop line, which is a prominent plot line at the dynamic support and resistance levels, and it will move along with these support and resistance levels. To fully leverage the strength that a trend offers, you can move your stop when the trailing stop flattens out. As mentioned earlier, when the ribbons and the trailing stop are flat, it indicates that the market is showing signs of moving sideways, or that buying or selling pressure has stalled. Therefore, when you notice a flattening, we will move the stop to minimize risk and protect the profits we have earned. Next, we will explore how multi-timeframe analysis can be used to enhance the reliability of signals from the PANA Kanal indicator through the multi-timeframe fusion method. This approach is crucial for improving trading signal accuracy by integrating data from multiple timeframes, offering a comprehensive view of market behavior. This method uses 5 different timeframes, displayed on panel 2 as individual plots, each representing a specific time frame. When all 5 time frames align and produce a bullish signal from PANA Kanal, a bullish signal is proposed, indicating that the uptrend is strong and likely to continue. This is an ideal time for traders to look for favorable entry points to optimize potential profits. Conversely, when all 5 time frames agree on a bearish signal is suggested, signaling a downtrend that may extend further. An important aspect to note is that the overlap signal ends when one of the 5 time frames changes its signal. This shift disrupts the consensus among the time frames, potentially signaling a trend reversal or a lack of alignment in the current trend. This helps traders identify potential market fluctuations and prepare strategies for position adjustments or capital protection. The multi-timeframe fusion method not only enhances signal accuracy, but also assists traders in recognizing market consensus at various levels. This consensus is a vital factor that gives traders a clearer perspective on the strength of the trend, enabling more confident and effective trading decisions. Next, let's explore an essential analytical tool known as multi-instrument synergy, designed to evaluate correlations between financial instruments to enhance the accuracy of trading signals. This indicator operates by combining signals from multiple instruments to provide trade recommendations based on the overall market consensus. The mechanism of multi-instrument synergy is similar to the multi-timeframe fusion approach, but instead of analyzing across multiple timeframes, this indicator focuses on 5 different financial instruments. Signals are collected and analyzed for each instrument individually, then aggregated to determine the overall trend. When all 5 instruments align with bullish signals, the indicator suggests a bullish trade, signaling a strong and reliable upward trend. Conversely, if all 5 instruments agree on bearish signals, the indicator proposes a bearish trade, reflecting a clear and likely persistent downward trend. A standout feature of multi-instrument synergy is its ability to analyze negative correlations between instruments. For instance, the indicator doesn't just evaluate the trend of NQ, Nasdaq futures, but also compares it with other instruments like GC, gold futures. NQ and GC often exhibit an inverse relationship, where a rise in one instrument corresponds to a decline in the other. This is particularly valuable for validating NQ trends. If NQ generates a bearish signal, while GC simultaneously provides a bullish signal, the bearish signal for NQ becomes more reliable. Conversely, if GC trends downward, the bullish signal for NQ gains higher credibility. Multi-instrument synergy goes beyond just capturing individual signals. It excels at identifying early signs of disagreement among instruments. This is especially critical in volatile markets, where rapid shifts in one instrument can significantly impact the overall trend. For instance, if bullish signals are identified across 4 instruments but the 5th instrument shows a deviation or a potential reversal, it serves as an early warning for traders to reevaluate their trading strategy. By thoroughly analyzing inter-instrument correlations, multi-instrument synergy offers traders a clearer perspective of the market, boosting confidence and precision in trading decisions. This indicator is a highly effective tool for identifying and capitalizing on trends based on strong connections between instruments, while minimizing risks from isolated or unreliable signals. Next, let's explore how to set up a trading strategy for optimal efficiency and clarity, starting with the setup for the multi-instrument synergy indicator. This is a crucial step to ensure you maximize the analytical and signaling capabilities of this tool. For this setup, I recommend disabling all candle colors and focusing solely on the background color to highlight the indicator's signals. This approach helps you identify signals easily without being distracted by the candle's colors. When a signal is triggered by the multi-instrument synergy, the chart's background will change color, while the candles themselves remain uncolored. This method provides a clear and efficient way to emphasize the most critical signals. Next, in the input settings of the multi-instrument synergy, to enable the indicator to analyze correlations across multiple financial instruments, I'll use the PANA Kanal indicator. Specifically, the signal setting should be adjusted to Signal, Trend. This is a reliable and powerful signal designed to reflect the market's primary trends. Additionally, to ensure the signals are properly encoded and functioning effectively, I recommend visiting the PANA Kanal product page. On this page, under the section titled Dedicated NinjaScript Signals, you'll find detailed information about how the signals are encoded and can input the correct parameters. You will notice that after setting up, the multi-instrument synergy indicator only displays a background color when its signal appears, while the candlestick colors remain in their traditional design. This makes it easy to identify signals from this indicator without affecting the familiar appearance of the candlestick chart. Next, we move on to the setup for multi-timeframe fusion. This time, the setup will be the complete opposite of multi-instrument synergy. We will keep the candlestick colors and disable the background color. This approach allows you to clearly distinguish the overlap regions of the two indicators. Additionally, to prevent signal markers from overlapping, you can adjust the positioning of the multi-timeframe fusion signals. This creates a space between the markers of multi-timeframe fusion and multi-instrument synergy, making the signals clearer and easier to observe on the chart. You will see that when an overlap occurs across instruments, the background is colored, and when an overlap occurs across time frames, the candles themselves are colored. This setup not only helps you easily identify each type of signal, but also enhances your ability to focus on important signal zones, allowing you to make quick and accurate trading decisions. Finally, we will set up PANA Kanal on the chart to achieve maximum effectiveness and visual clarity. To start, you can adjust the parameters to match those in the input settings of both the multi-timeframe fusion and multi-instrument synergy indicators. This ensures that all signals are analyzed and displayed consistently on the chart. During this setup, we will first turn off all candlestick colors, as well as the color of the PANA Kanal ribbon. This helps you focus more on the main signals without being distracted by other elements on the chart. Next, we will turn off the colors of the plots on the PANA Kanal indicator. However, we will keep the trailing stop plot to serve as the stop placement marker, making it easier for you to identify stop loss positions. In the alerts section, we will also disable the trend signal to avoid clutter and only keep the pullback and break signals. These signals provide important information to make more accurate trading decisions. The final result is a clean and user-friendly chart interface that allows you to easily monitor and evaluate trading signals without feeling overwhelmed or distracted. This setup provides a more intuitive and effective trading experience, giving you the confidence to make better trading decisions. Next, the most important part of the trading strategy is the entry checklist. To ensure accuracy and reliability, the first condition for placing a trade is that the bullish signals from multi-timeframe fusion and multi-instrument synergy must be proposed on the same candlestick. This means that both indicators need to be in agreement and show an uptrend on the chart. When both indicators confirm the bullish signal, we proceed with the buy order. You will notice that when both indicators are in agreement, both the candle color and the background color on the chart will be highlighted, indicating that a clear consensus is taking place across the selected timeframes and instruments. The background color represents the agreement from multi-timeframe fusion, while the candle color indicates the agreement from multi-instrument synergy. Conversely, when both indicators confirm a bearish signal, we only proceed with a sell order. When both indicators align, you will see both the candle color and the background color on the chart illuminated, indicating clear consensus across the timeframes and financial instruments you have chosen. The background color highlights the agreement from multi-timeframe fusion, while the candle color signifies the consensus from multi-instrument synergy. Let's now take a closer look at how this strategy plays out with real signals on the chart. Utilizing this approach for trade entries brings several significant advantages that can greatly enhance your trading performance and decision-making process. Increased accuracy and reliability. One of the primary benefits of this strategy is the increased accuracy it offers. By requiring both the multi-timeframe fusion and multi-instrument synergy indicators to align on the same candle, you ensure that the trade is backed by strong confirmation from multiple perspectives. This adds a layer of verification that significantly boosts the reliability of your signals. When these two powerful indicators both confirm a bullish or bearish signal, you can be confident that the market trend has solid support, increasing the likelihood of a successful trade. Filtering out market noise. The trading environment can often be filled with noise short-term fluctuations that do not represent the overall trend and can mislead traders. By waiting for both the multi-timeframe fusion and multi-instrument synergy to align, you effectively filter out these noise signals. This approach helps you avoid false breakouts and erratic price movements that could otherwise lead to unnecessary losses. By focusing only on moments when there is alignment across different time frames and instruments, you ensure that you are only taking trades that have a higher probability of success. Enhanced confidence in trading decisions. Confidence is crucial for successful trading, and having multiple indicators align gives you more assurance in your decisions. When you see that both multi-timeframe fusion and multi-instrument synergy are in agreement, It means that the market sentiment is strong and widespread across different time frames and financial instruments. This multidimensional confirmation provides a broader perspective and helps you trust your analysis, making it easier to act decisively without second-guessing. Optimal entry points for better risk-reward. This strategy is not just about finding signals, it's about finding the best possible entry points. When both indicators confirm a signal at the same time, you know that the market is poised for movement in the direction indicated. This ensures that you are entering trades at an optimal time, which can lead to better risk-reward ratios. For example, a strong bullish confirmation on both the multi-timeframe fusion and multi-instrument synergy could signal a strong upward trend, allowing you to set your stop-loss strategically and aim for a higher target, enhancing your profitability potential. Multi-layered market analysis. Another advantage is that you are not relying on a single point of analysis. With this strategy, you combine different layers of market information, multiple time frames, and financial instruments to make informed trading decisions. This is beneficial because it adds depth to your analysis and allows you to view the market from various angles. By confirming trends across different time frames, you ensure that your trade is aligned with both short-term and long-term market movements. Additionally, considering multiple instruments helps you understand how correlated or inversely correlated assets behave in relation to each other, giving you an edge in making strategic decisions. Through the real chart example that I will present shortly, you can see that there are fewer noise signals, and most of the signals you capture are strong and long-term signals. This is one of the significant advantages of applying this strategy. By entering trades based on the conditions we have set, you can avoid unnecessary short-term fluctuations, allowing you to focus more on trading with the main trend and achieving more sustainable trading results. By only entering trades when both the multi-timeframe fusion and multi-instrument synergy indicators align, you can filter out lower quality signals and increase the reliability of your trades. These signals tend to maintain their trend over a longer period, offering a stable and profitable trading opportunity. Focusing on long-term signals helps you avoid being affected by short-term fluctuations and false signals, creating a solid and less stressful trading strategy. Next, we will move on to checklist for entry number 2. This is one of the ways to ensure that you don't miss out on quality trading signals. When one of the two indicators, multi-timeframe fusion or multi-instrument synergy, provides a signal, we need to wait for confirmation from the other indicator before entering the trade. In this example, you can see clearly that when a signal from multi-instrument synergy appears, you should wait for a few more candles. We recommend waiting for 5-15 candles until a signal from multi-timeframe fusion also appears. At this point, when both indicators align, you can immediately enter a sell trade to take advantage of the ongoing consensus in the market. Conversely, you will clearly see that when a signal from multi-timeframe fusion appears, it is advisable to wait for a few more candles. We recommend waiting between 5 to 15 candles until a signal from multi-instrument synergy also appears. When both indicators align and signal a buy, this is the ideal moment to enter a buy trade immediately, taking advantage of the strong consensus occurring in the market. In trading, one of the key factors for success is the ability to accurately identify and confirm signals. Relying solely on one indicator to decide when to enter a trade can lead to false signals or situations where the market reacts only temporarily without confirming a larger trend. For this reason, the strategy that requires one of the two indicators, multi-timeframe fusion or multi-instrument synergy to appear first, and only entering a trade when the other indicator confirms the signal, is extremely important. This approach helps filter out noise and enhances the reliability of trading decisions. When relying on a single indicator, you may receive an early signal and mistakenly believe it to be accurate. However, in reality, the market is influenced by various complex factors such as short-term volatility, significant news events, or the actions of large traders, which can create signals that are temporary and unsustainable. Waiting for confirmation from the second indicator ensures that the signal is not just a fleeting occurrence, but is supported by deeper analysis. The agreement between the two indicators indicates that both are aligning with the current market trend, providing stability and reducing the risks associated with short-term fluctuations. Even though this alignment across different timeframes or financial instruments may not happen on the same candlestick, having confirmation from the second indicator still offers a higher level of confidence for entry. This way, you can avoid false signals and focus on trades with a higher probability of success. Next, we will explore the combination of consensus signals with real-time inverse phase correlation analysis between trading instruments on King Renko bar type, specifically NQ and GC. This analysis helps identify potential trading opportunities based on the correlation between assets, leading to more effective decision-making. I will use GC to assist in the analysis and make the bullish and bearish signals on NQ more reliable. When GC, gold rises, NQ, Nasdaq often tends to fall, and conversely, when NQ falls, GC typically increases. This relationship stems from the nature of gold and stock indices. Gold is considered a safe haven asset, so during times of economic or geopolitical uncertainty, investors tend to shift their assets into gold to protect their wealth. This leads to an increase in gold prices. When gold prices rise sharply, it often signals a decline in confidence in the economy and the stock market, causing indices like the NQ to drop. On the other hand, when the stock market, such as the NQ, experiences significant growth and investors are optimistic about economic stability, they may pull money out of safe haven assets like gold and invest in stocks instead. This leads to a decrease in gold prices, while stock indices like the NQ rise. For this reason, analyzing the correlation between NQ and GC can help traders better assess the strength of the trend on the NQ. When gold rises sharply, it can be seen as an indicator of a potential bearish trend on the NQ or a weakening of investor confidence in the stock market. Conversely, if gold decreases, this could suggest that the stock market is on an upward trend and stronger. It is important to note that this correlation can also be influenced by other global factors, such as geopolitical tensions or significant oil price fluctuations. For example, if tensions arise in the Middle East, it may lead to an increase in both oil and gold prices, while stock indices like the NQ could decline. Analyzing the correlation between NQ and GC can provide a more comprehensive view of the market situation and help traders make more suitable decisions. Finally, let's move on to the last checklist, which is using the pullback and breakout signals from PANA Kanal to open up more short-term trading opportunities. Specifically, we will enter a sell order when both the breakout and pullback signals align with a bearish consensus through multi-timeframe fusion and multi-instrument synergy. At this point, set the stop at the trailing stop line of PANA Kanal to safeguard the position and manage risk. Conversely, for a buy order, we will enter when both the breakout and pullback signals align with a bullish consensus through multi-timeframe fusion and multi-instrument synergy. Again, set the stop at the trailing stop line of PANA Kanal to ensure the safety of the trade and optimize potential profits. To understand how to apply this checklist in real trading scenarios, let's review how the entry signals appear on the chart and why these checklists are essential, as well as their reliability. When entering a trade based on the breakout and pullback signals from PANA Kanal, it is crucial to confirm that these signals are supported by multi-timeframe fusion and multi-instrument synergy. This means that both bearish and bullish signals should appear and be confirmed across at least 2 different timeframes and across various trading instruments to ensure high reliability. When a breakout signal appears, it indicates that the price has surpassed a significant level, signaling that a strong trend is forming. The subsequent pullback represents a temporary adjustment within this trend, creating an opportunity to enter a trade at a more favorable price before the trend continues. The agreement between different indicators helps filter out noise and ensures that the entry signal is timely and reliable. Pullback and break signals appear frequently, but combining them ensures higher reliability. In trading, pullback and break signals often emerge at key price levels, creating opportunities for traders to capitalize on both short-term and long-term trends. However, not all such signals are reliable, as markets frequently produce false breakouts or deeper-than-expected pullbacks. By leveraging multi-timeframe fusion and multi-instrument synergy, traders can validate these signals for better reliability. Signals confirmed across these tools represent genuine opportunities, allowing traders to make informed decisions and minimize the risk of falling prey to false signals. Designed for traders looking to expand short-term opportunities. This method is highly suitable for scalpers who thrive in high-frequency trading environments. Scalpers seek opportunities in lower time frames where signals appear more frequently. By incorporating tools like PANA Kanal, traders can identify potential entry points more clearly and take advantage of smaller, faster-moving market conditions. This approach not only increases the frequency of trades, but also ensures that each trade is based on well-confirmed signals rather than subjective assumptions. Helps minimize missed trading opportunities. Missing valuable opportunities is a significant concern for many traders. The pullback and break strategy provides a flexible approach that allows traders to capture opportunities that may have been overlooked by previous methods. This is particularly critical in fast-moving markets where having a systematic approach ensures that key signals are not wasted. Offers robust confirmation and logical stop placement. The greatest strength of this method lies in its structured confirmation and risk management system. With the support of PANA Kanal, traders can set their stop loss at the trailing stop level, ensuring that it's both logical and resistant to minor market fluctuations. Especially for pullback signals, the trailing stop plays a vital role in securing profits as trends continue in the predicted direction. This method not only protects your capital, but also enhances the sustainability of your trading portfolio. Enhances profit protection with trailing stop. Another standout advantage of this strategy is the integration of the trailing stop. This tool not only aids in setting stop loss for current trades, but also effectively safeguards profits as the market moves in your favor. In cases where prices make a strong break or pullback, the trailing stop can be adjusted to lock in profits or minimize risks in case of a market reversal. Moreover, this tool can be seamlessly applied to signals from earlier checklists, ensuring a comprehensive and cohesive trading strategy. Through its demonstrated effectiveness, you can clearly see that the confirmed signals have significantly higher reliability. By combining the right analytical tools and indicators, the strategy has effectively filtered out unnecessary noise, providing a clearer view of market trends. This not only enhances your trading efficiency, but also minimizes the risks associated with decisions based on weak or misleading signals. As we approach the end of today's webinar, I want to thank each of you for joining and participating. I will be staying for a few more minutes to address any questions you may have. Throughout this session, I shared with you how to approach trading effectively using the multi-confirmation trading strategy, supported by 3 powerful tools: PANA Kanal, multi-timeframe fusion, and multi-instrument synergy. This method is designed to filter and select the most reliable signals, elevating your trading accuracy to a new level. Thank you for investing your time with me today. I hope that the insights you gained